like to introduce Rim Charkani, the co-founder and CEO of WALO. It's a company out of Quebec City in the personal finance sector that was founded in 2018. And the company's tagline is ensuring the next generation's financial well-being. So good luck, Rim. Over to you to hear your pitch. Please take it away.
Hi, everyone. I'm Rim Charkani, co-founder and CEO of WALO. Our purpose at WALO is to give the opportunity to every kid to start their life on the right foot from the money perspective. What if I told you your kid would throw away $670,000? Well, that's what the average US household leaves on the table during their lifetime because they don't have the right tools to spend, save, grow, transfer, and safeguard their money in an efficient manner. We asked over 1,000 parents what they think about their children's financial future. 99% said they care a lot and they would love to teach their kids about money. Those same parents were 69% to agree it's not easy to teach their children financial responsibility. And that's where we come in and fill the gap. The WALO mobile app connects to parents and their teens' bank accounts and teaches young people how to become financially responsible. What makes WALO unique is that we embed financial education into a fun gaming experience using real-life money. Teens are guided throughout their financial and learning journey to make the next best actions based on a financial health score in the background. They are incentivized using coins, rewards, nudges, and social proof. So let's take an example. This is Laura and her 2 teenagers. Laura downloads the WALO app, registers her children, connects bank accounts, and sets up allowances. As you can see, Laura and her children now have their own version of the WALO app. The goal here is to empower Laura to teach Julie and Leo about money and to spark the money conversation in the family. Our app has 3 educational components on saving, spending, earning money, and the whole thing is gamified for kids. So now Julie can learn to save and start developing healthy habits by creating meaningful saving goals and contributing regularly. She starts earning extra money by completing tasks. In fact, Laura can assign paying jobs for her to motivate her to do work and work for her own money. As her bank account is connected to WALO, Julie can monitor her transactions and start building awareness about mindful spending habits. Leo, on the other hand, he loves binging quizzes and earning extra coins. He loves teasing his sister as he tends to always come first in the weekly leaderboard. And to catch up on her brother and friends, Julie completes the suggested activities to earn coins. In fact, WALO automatically recommends the next best actions for Julie to maximize her progress and optimize her financial learning journey. Julie and Leo can redeem their hard-earned coins for rewards in our built-in store, which is adaptive and built to grow with usage and external offers. There are 95 million Julies and Leos in North America alone, and over 150 million parents such as Laura. If we factor in a very conservative average revenue per user of $25, that's a market worth over $6 billion. In terms of go-to-market, right now we do have a free public app in app stores in beta, but we are also experimenting with the B2B2C model. In fact, our ambition is to become a global player. So in order to reach scale and win the market, we need to hack our way into customers' hands by piggybacking onto existing networks. And we are targeting financial institutions to license a white-labeled version of our product. Those financial institutions include banks, credit unions, and benefits providers, for example. In terms of revenue, on the B2C side, our app could be monetized in different ways. For example, through interchange once we introduce a prepaid card, or we could easily introduce premium features as well. For the B2B2C model, we'd make money from licensing our product to financial institutions for a volume-based fee plus an initial setup fee. Looking at the competition, while most of our competitors focus on the banking aspect of their offering, which is banking for teens, or the allowance management aspect, we really focus and center all our product around financial education, and more precisely, delivering learning seamlessly to our young users. We want teens and tweens to be engaged with our app and learn while having fun. And this is brought by our gamification layer. In addition, our educational features are powered by experiential learning based on behavioral science and also by machine learning to guide our users through their learning journey. Let me introduce you to our team, starting with myself. I personally come from banking and strategy consulting, and I'm surrounded with an extraordinary team with extensive work experience in tech, customer experience design, product, marketing, data science, and education. Now a little bit about us. Since we started the company in November 2018, we've received multiple grants and awards, and we are currently incubated at Desjardins Startup in Residence program. Today, each one of you has the power to propel our mission. Show your support and help us build the future of our children. If you're a parent with kids at home, try out our beta. If you're a financial institution, reach out and let's partner. Thank you.
Good presentation, Rim. I think we can start asking questions now. So it's Dave Ainsworth here. Listen, can you tell us a little bit about your beta and how it's going so far, and maybe what some of the key learnings have been now that you've released the app into the wild, and sort of what's happening?
Sure. So far the beta has been going very well. We have over 600 users in the platform. We've launched the beta over 2 months ago. We haven't been marketing it at all. We have tested two things in the beta. The first one is the engagement and usage, and the second thing is how important is it to have a payment card attached to the product. For the first thing, it was really the gamification features that stood out. The fact that kids have recommendations and have ways. They have some guidance. They're not just left to themselves. That's one of the key findings. And for our second hypothesis that we were testing, realized it was really important that we introduce a payment product at some point, either by partnering with a financial institution or by releasing our own payment product. So we're working on that.
Okay, thanks. And the second question is, how are they signing their accounts up now? Are you going through a sort of a third-party aggregator, or banks allowing a direct connect, or what's happening?
Yes, we use Flinks and MX as data aggregators. And right now, the beta doesn't have the accounts connectivity, to be honest. We're still testing those. They're in alpha right now. We'll be deploying that in the next couple of weeks. And finally, we will be deploying the ability to send money directly from the app through our payment processor.
Okay, thanks.
Rim, can you give us a bit of an overview of how your discussions are going with the institutional player for your B2B2C?
Just trying to not say too much, but respond to your questions. It's going pretty well, although things are slow in with all the people we've been talking to. We've been talking to 5 institutions. Things are going slow in terms of the discussions and follow-ups and different peoples to meet. However, there is interest. So no one has closed the door to us or told us this is not interesting. They've always trying to connect us with the right people inside the business and trying to find how we could plug this inside their budgets or their roadmaps.
In terms of business model, you're saying you imagine your revenue coming from licensing on those institutions as well as the payment rail. Have you considered having a monthly fees for the end user as well, or is that off the table?
So I think there are so many different ways to monetize this without having the parents to pay. We've thought of introducing, for example, adjacent product that would easily be monetized, and this is just an engagement tool that goes on the marketing costs. So we have thought about it, but while speaking with actual customers, mothers, and different types of parents, it seems like they don't want to pay. So unless we really want to go there and test it, the feedback we've had is that they don't want to pay for this themselves.
Yeah, I don't want to pay for much thing in my life, yet I still have to. Just last question on the American, because you were talking about the market, and you included the US in there. Do you see any major difference between how you would attack the US market to the Canadian market?
So the first thing is that in terms of competition, the Canadian market is still quite untapped. The US market has seen a huge growth in this area in the last couple of months, years. I think in terms of customers, though, we've done a large market study and actually surveying people, and American customers are ready to pay for this compared to Canadian customers. That was one of the major findings.
Thank you, Rim.